Today on the show, I have the pleasure of speaking with Chris Craddock. Chris is a nationally certified life coach in leadership and is a top real estate investor, closing on over 30 to 65 deals a month. Chris also hosts the Uncommon Real Estate podcast, and he has a bunch of companies that consistently bring in close to $10 million in revenue year after year. His team, the Redux Group, has just sold over $160 million in real estate volume in 2020. I'm really excited and pumped to have Chris on the show today, share his incredible knowledge and his insight into the world of real estate here in the United States. G'day, Chris. Welcome to the show. How you doing today, mate?
Hey, brother. Thanks for having me here.
Mate, my pleasure. And as we were saying in the green room, twice in 1 week, right? I was on your show earlier in the week with your awesome co-guest, co-anchor, and now I get to reciprocate it back here on Investing in the US podcast. So great to have you with us. Mate, to kick it off, tongue-tied this morning on a Friday, to kick it off, I always ask my guests, rewind the clock and tell me how you made your first ever dollar as a kid.
Well, I'll tell you, I love this question. And Barbara Walters and that's one of my favorite books, How to Talk to Anybody, Anywhere, Anytime, or something like that. It says, this is the question to ask anybody that is a successful businessman. And so you are literally one of the only people that I've ever heard ask that question other than me. So I love the fact that you ask it on the podcast too. It's a great question there. So for me, honestly, so I've got two memories. One was collecting rocks and selling it to people that felt bad for me. Like, I don't know why anybody would buy any of these rocks I was selling, but I also made those little pot holders, like weaved the pot holders, and I went door to door selling them, 50 cents for the little nylon ones and $1 for the cotton ones. And I made a bunch of money just selling them. I doubt people even used them or wanted them or cared about them, but I think it was like this little 4 or 5 year old kid wandering around asking, like having hustle, that people are like, man, got to respect the hustle.
No, that's awesome. I actually remember when I was really young, like yourself, I used to sell bags of small dirt, like just dirt that I would grab from my parents' garden. And just like, who wants like in a sandwich bag, like one of those Ziplocs? It's like, it's not even enough to do anything with. But like looking back, you're like, well, maybe someone wants to buy bags of dirt because that was the product that was plentiful that I could go dig up from my parents' garden. But that's awesome. We've got something in common. But mate, walk us through your upbringing and into the world of becoming an entrepreneur. Was there a life before what you've built to date? And talk to us a little bit about that.
Yeah. So, I mean, honestly, the crazy thing is, I was a mess as a kid, just a total mess. Right. So, I got into a lot of stuff, and I'd be dead or in jail if it wasn't for me getting involved with Young Life and having my life changed. So, but I was an entrepreneur even at the time, selling things that were, most of it's not as illegal as they used to be, in the States anymore. But that was what I started doing. I've got young kids now, and I can't even believe the stuff I was into as a 13-year-old. It was just crazy. But yeah, entrepreneur, selling street side pharmaceuticals, we'll put it that way. And then, but then, life changed a little bit. And because of the change, I straight up would be dead or in jail right now if it weren't for getting involved with Young Life and have my life change the way it did. So I went on staff with Young Life and then was on staff with my church as a pastor. And, and then, honestly, it changed my life, and I was a salesperson, right? Like I was selling, what I still believed to be the greatest product of all time, change your life as far as that's concerned. And through the process, 2000, I got married. 2003, my wife got pregnant, and I was working, working in Young Life. I was making between $20,000, $25,000 a year. And in the DC area, you can't live on $20,000, $25,000 a year. And we wanted my wife to stay home and raise the kids. So I went to the library, checked out every book I could on real estate investing, and went and started knocking on doors of distressed properties before I knew a clue. Like, I cannot believe how little I knew. But I always say imperfect action trumps perfect inaction, right? And so I just started knocking on doors. And within 4 months, I made 12 times what I made in a year. And I'll tell you, it was crazy. So it allowed me to continue doing ministry stuff, and it allowed us to buy the house we live in now. We're actually building another house currently. But then the money started running out as I started having more and more kids. I've got 6 kids now.
Wow.
And Oh, I know. It's crazy, man. Once I figured out what caused it, I could stop it. But yeah, so I started flipping houses again, and I'd always led large groups of people in ministry. I'd gone back to school. I got a doctorate in leadership. And so, just leading people has been like a passion of mine. And so I came across Gary Keller's Millionaire Real Estate Agent book. And, I ended up getting licensed as a real estate agent. And I guess it was December 2014, we launched our real estate team. And since then, I have 11 different streams of income at this point in time. A number of them are 7-figure businesses, and it's just been incredible. It's been a fun ride. That's
awesome. And so it all came from the fact that you weren't earning enough, and you just took action to go out and find something different. You definitely struck me as a guy that's full of energy. So I could see that you needed to harness the energy into something to make it grow into what it is today. So that's well done. Talk to me about, because I've actually had David Osborne, one of the early guys of Keller Williams, on the show. A really inspiring guy. Talk to me about what the business is that you've grown today. And you mentioned multiple streams of income. A lot of the listeners on this show are real estate investors, but they also don't. The average real estate investor looks at an agent or a brokerage as like, they're just there to, provide a service, but it's actually quite profitable. Do you want to walk us through how you built the business in and around creating an agency?
Yeah. So, I mean, here's one of the things that I remember hearing a long time ago. The phrase, the business phrase that most of us have probably heard of, and if you haven't, it's really a powerful one. It's called vertical integrations, right?
Yep.
So you're already doing stuff, and how do you add more to it? And that's actually what I built my coaching business around was people that are already paying for things. How do you make the most of what you're already paying for? Well, my business coach said to me, I think a couple years in the business, he's like, Chris, why get paid one time on a transaction when you can get paid 5 times, right? Why get more clients when you can get more of the client? Well, I think it's both, but that's the whole thing. And so when you can get paid on, the purchase as a listing agent, as a buyer's agent, you can get paid. I have an insurance company. When you get paid to help people with insurance, when you can get paid to help people with title, right? When you can get paid, my wife runs a lending, a lending branch. When you can get paid on the lending side, there's all of these different pieces across the board, construction, hard money, just flipping, buy and hold properties, coaching. I'm part of EXP, and EXP has a really robust downline for anybody that comes in under you. So all of these different places, essentially are just different ways that you can get paid doing the same thing. And so I'm actually rereading Good to Great right now, which I read in the past, but I don't know why. I quote it all the time, but it's been years since I've read it again. And I'm just rereading it right now. And the flywheel is the retail business, right? The retail business makes so much business happen. And then, you can throw construction business from there and title and all these other things. The flywheel creates all of these other opportunities.
And I love that. I talk a lot about on this show business ecosystems, which is it's around the same thing, vertical integration and getting paid multiple times on the one transaction. And I think it's so important, and I keep harping on it, that's, in my opinion, is how true wealth is created. It is about having a little piece of all parts of the pie, not just having the one piece, which might be, buying, in my case, buying real estate. Maybe I can do property management. Maybe I can do construction management. Maybe I can get into, on my side of the fence, we've got material sourcings from the Asian markets. How do I profit on those types of things? So it's really, really interesting. And after doing this show for nearly 6 years and interviewing so many incredible entrepreneurs, the one thing I see the most common thread is that they start with one thing, i.e. real estate investing, and then grow the ecosystem around that to really encompass those multiple streams of income. So absolutely love that. Talk to me about how you're seeing today's market coming out of COVID. How'd you guys fare, I guess, first going through COVID in last year? And then how you transitioning and seeing property prices skyrocket across the United States right now, and really across the world, but let's face it.
Yeah, well, I'll tell you, at the start of COVID, we had about $150,000 a month in overhead, right? That goes out whether we sell a house or not. Now it's much higher than that. But I still remember, just to be honest, like I kept hearing rumblings about it, but I just, there's always wars and rumors of wars, right? Everybody always has reasons why they want to ball up and not go out and make stuff happen, right? And so I just didn't think anything of it. And then I still remember the one night my wife walks into the bedroom. I was getting ready for bed and she's like, Chris, the world is shutting down tomorrow. And I'm like, yeah, right. I've been hearing this for a long time, right? Whatever. And she's like, no, read the news. I read the news. It's like lockdowns in place, this. And I'll tell you, I had a moment of absolute panic and freak out because I'm like, man, we've done really well. We've got a high net worth, but we can only go so, and literally I just bought some stuff in cash that I was like going to be turning around. And so like, I was not cash heavy at all. I was very cash light. And so I was like, holy crap, this is bad. This is really bad. Like we can go for so long. And I thought about all of our people and I'm like, man, I can't leave them to fend for the wolves. So, as I was sitting there freaking out, I was like, okay, well, I'm going to keep paying our people. But with that said, I can only pay them so long, before the well runs dry. If we sell no houses, 150 a month goes out, how long can it go? So let's hope it comes back. But then it turned out to be one of the best years that we could have ever dreamed of, because when people were stuck inside, they realized that, man, I don't like living here. I'm going to go find another place, or whatever. All of those different things. The investment side of my business started cranking. I started the coaching. I started to coach on teaching like investors how to monetize some of their deals that were dead deals, how to create vertical integrations and what they're already buying. So all of these things just kind of cropped out of what I thought was going to be one of the scariest times of my life. It turned out to be one of the best business times I could have ever dreamed of.
It's so funny that you're looking back on it, because I'm sure in that moment you were freaking the hell out. Like no one thought, even, my side of the fence, no one thinks that all of a sudden everyone talked about the V-shaped recovery, but no one knew how long it was going to last, right? Was it going to be more U-shaped, or was, so to have that bounce back. And I guess the question is, how quickly did you go from that panic? Did it take a couple of months? Because I know on my side of the fence, we were really panicking about rent collections in April and May and June. What type of period of time did you start to think, okay, I can see the light through the trees?
Well, I personally own a bunch of rental properties as well. And I only had one tenant even ask about not paying. So right away when I wasn't hearing, I'm just like waiting the whole time. I'm like, okay, when are they going to all ask to stop paying? And then when all of a sudden the market just caught fire and I'm like, okay, when is it going to fall apart? When is it going to fall apart? And then I think it was probably around June June or July, where I was like, okay, because then I started to understand some of the economic pieces there that the government's just printing money and creating inflation, and that real estate is one of the best bets against inflation. And so all the institutional money, anybody that has cash is going to start dumping money into real estate, which, created what happened earlier this year with this crazy scarcity, which, drove prices up. And so then all of a sudden I realized like what the economy was doing, and, that we didn't have to worry because, good things are going to come out of this for the people that are in the real estate market. Now, the crazy thing is, again, I don't know where everybody stands politically, and I know sometimes this gets politically charged, but I loved Ronald Reagan's quote, the scariest words in the English language are, I'm from the government and I'm here to help. And, what ended up happening was, because of all of these programs, the government just printed so much money, and then that forced so many people, the inflation happened. And what happened was the value of real estate went way up. So the people that were wealthy and had money in real estate just became much wealthier. And the people that were not wealthy enough to have real estate, it made getting into real estate a lot harder, and anything they had because of inflation got devalued. So the poor got poorer and the rich got richer because of what the government did in the last 12 months. I mean, literally, I think 30% of all dollars in circulation were printed in the last 12 months. It's crazy, which is giving us this 6% inflation that we're looking at in the next 12 months. It's insane.
Yeah, and look, and I'll be the international voice here. That it's happening across the world. Like back in my home country of Australia, it's happening in Europe, and I think a lot of people to that point were lessons learned from 2008. Right, let's not be slow getting the tap going, but then the tap can be on for too long, and you got a flood. Right, so it's also having this opposite effect. So let's talk a little bit about what you're seeing in your local markets. And I maybe just want to, for the listeners, talk about where you're currently seeing deals and doing deals in terms of market, and then turn into how you've seen that from your brokerage company in terms of the spike in property prices. And do you think that's going to be maintained?
Yeah, I do think that we're going up. I talk about this on my, I nerd out on this stuff. I love looking at this stuff. So almost every day I'm dropping something on TikTok talking about economic indicators, right? Which is so funny because I feel like I need to dance or something if I'm going to be on TikTok, right? So, but I'm just like, I'm just going to put this out there, and if people like it, they like it. If they don't, they don't. It's been really fun because, lots of people are commenting. Some people tell me I'm an idiot, and some people, they love the trolls have come out to play, right? But it's really fun to look at. I believe that we are that real estate is a strong bet for a number of reasons. One, we already talked about inflation. Real estate's a hedge against inflation, right? People run to hard assets, gold, silver, even cryptocurrency, real estate. People are running to these hard assets. Two, before 2008, builders were building an average of 5 million houses a year. After 2008, builders have been, and this was for decades. It wasn't just a short-term thing. That was the average. 5 million new houses hit the market every year. After 2008, only 20%, only about 1 million houses were hitting the market every year. So because, builders went out of business, builders were gun shy, banks were less likely to lend to builders, all of these reasons, there was only 20% of the new houses that normally come online were coming online, right? Which again creates scarcity, and scarcity drives prices up. So that's another piece. The next piece is we're seeing that interest rates are so stinking low that people are upgrading. They're moving out of their old house into their new house. And because money is so cheap, they're able to afford to keep the old house when in decades and generations past, they weren't able to keep those old houses. So now they're keeping the old houses, which means less houses are coming on the market, pushing properties up, again, creating more scarcity and pushing prices up. So I think for those reasons, and there's a number of other ones that I don't know that we have time to talk about right now, but I think for those reasons alone, we're seeing a lot of scarcity in the market, and I don't see a lot of new houses hitting the market that are going to give us relief from that scarcity, which is going to keep us in a upward pressure in the market.
And I'll echo some of what you're saying there. I think if you look back at history, and no matter where you live going across the world, there's always been a housing shortage, right? And no matter what time of like the late 90s, the 2000s, the 80s, there's always a housing shortage, right? There's always something. I think what I'm seeing and hearing, and more on the commercial side and the brokers I'm talking to across different MSAs, is also this transition. Like I was just talking to a broker the other day in Phoenix about getting entitlement and trying to build more units is just becoming longer and longer. And I've had a lot of experience working in New York City, in LA, and in Austin, where the red tape can be really, through political action or inaction. And that also causes an issue with supply and demand, right? Where you've got not enough supply coming to a market, but yet demand is high, then you're always going to have this housing imbalance. Thus, it's going to increase rents, and thus it's going to increase the cost of buying properties. And when wages aren't keeping up with that, it makes it very, very difficult to offset that and bring back a norm, coupled with quantitative easing. So a lot of things going on in that, but those things are all related to how we are seeing this V-shaped recovery, so to speak. But as you mentioned earlier, the rich are getting rich and the poor are getting poorer. And so how as real estate investors do we navigate that? What are we doing in order to place our money? Because as you know, Chris, as I know, like my existing properties are looking freaking awesome, right? But now I've got to go buy new properties in today's market. Okay, I've got to now readjust my expectation of what I'm going to pay for, price per pound, price per square foot. So let's get into that second part of my question, which was, how are you seeing the property prices grow over the last 6 to 12 months? What are you seeing in where are you investing? What are you doing business in? What areas across the country?
I'm in the DC area. DC, Maryland, Virginia. And then, I've got teams in Baltimore and also in Richmond. But I also, my coaching business is investors across the country. I'm looking at all across. I mean, we were seeing here locally, we had an average growth. Again, I love looking at the numbers on all this stuff. So it was just over 23% growth over the last year, which is insane. But we're also DC area, right? Didn't get hit as hard in the recession after 2008, and we recovered faster because, even when the government shrinks, it grows. So it's like a big magnet just pulling people to this area. And so we're a well-insulated area. We don't get the same cap rates as other places just because it's more expensive to buy, but our levels of appreciation tends to be higher. And also, our equity and principal pay down safety for this area is really, really a strong area to be in.
And listeners, what Chris is saying there is essentially, again, back to supply demand. When you've got a lot of demand to live in an area, guess what goes down? Cap rates, because the risk of buying in a certain area is also diminished. Because when you come to sell a property, whether it be commercial or residential, there's going to be just a lot of buyers out there. You buy in a tertiary market, cap rates are going to be a lot more expanded because there's not as many people in that particular market who are going to come and trade with you once you want to sell. So it's all a measure of risk. Again, going back to that supply demand curve. So, Chris, how are you seeing the future hold for you and your business now, coming out of sort of late 2021 now, where this bloody second variant or third variant, whatever? I've lost count of how many variants there are. But what are you seeing coming into 2022, and how are you positioning your business differently from where you were that night your wife said, we're shutting down and you're going to be spending 150 G's a month on overhead?
Yeah, no. That's a great question. I'm looking at 2022 and I see that we've got a strong outlook. So I'm just working to level up myself and the different businesses that I'm a part of, right? So what am I doing? I'm just looking to be a better business owner. So learning how to create better dashboards and read the numbers better. I'll tell you, when you first start off, everything's activity and skill, right? When you first start off, it's your business grows by extra hard work, right? And so I remember listening to Keith Cunningham. He was talking about that, right? It's like you're in a low performance vehicle when you first start off, like a tricycle, right? You're just pedaling. You can only go as fast as you can pedal. But then every time you level up, the performance of your vehicle gets bigger and bigger. So just think about going from a tricycle to a bicycle, right? With a bicycle, you can go faster, right? But you have less points on the ground, so you can crash harder. Then you move to a car, right? You can go faster. Now you've got a dashboard in front of you. You got a tachometer, a dash, like all the other stuff. And then you can go to like the next level, which is like a jet plane. And each time you do it, takes less effort to move it, right? But if you crash, it's a lot worse. And so that's kind of what I see as I'm scaling up and growing as an entrepreneur is learning how to read the data and get to a place where it takes less effort to move faster, right? And so that's what we're really focused on for this next year. And it's really, really great. I see with all the different businesses, we're even as this time of year, we tend to slow down. We're seeing that we're up across the board on everything year over year, month over month. So it's really good. And a lot of my coaching students, same thing, because we're looking at how do we just make the most of every opportunity that we have. And I'll tell you, for all you business owners out there, if you can understand how to make the most of every opportunity you have, that is the best ROI you can get. Not paying for new stuff, but literally capitalizing on the stuff you've already paid for, you get the best return on investment when you can do that.
100%. I'm a bit of a data nerd myself. So what are those key performance indicators you're trying to monitor better with your dashboard in 2022? Just a handful of them, just for the listeners to understand what you're doing in your business.
Yeah. So here's one of them. So I'm trying to look at things across the board where I can look at a KPI and, in all of the different businesses I'm a part of. So one of the ones that we want to monitor is conversion rate, right? You look at conversion rate. If you take conversion rate from 10% to 15% or 25% to 40% or whatever it is where you're raising that conversion rate, all of a sudden, what you focus on expands. What you focus on gets better. That's just the way life works, right? You think about when you drive down the road. I bought a Ford Raptor a couple of years ago. Now, anytime I drive on the road, I see Ford Raptors, right? I can't miss them, right? I didn't see them before, but now I see them, right? The same thing's true is when you focus on something, you begin to start seeing it. Our brain, we would go insane if our brain didn't filter out things that we didn't tell ourselves is important, right? So when we decide that this is important to focus on, then we can make it better. So if you start looking at stuff like conversion rate, right? That's one of the big things there. If you go from 20% to 40%, right? Think about the hundreds of thousands of dollars, the millions of dollars, the tens of thousands, depending on where your business is, of dollars that you make by just capitalizing at a higher level, right? And one of the things that you have to do is start asking yourself, whose fault is it? If these people were going to sell or these people are going to work with somebody in the next 6 months and they chose not to work with you, normally, let's be honest, most of us like to point other fingers on other people and be the victim and say, oh, they just didn't get it. They didn't get it. But when we change our mind and say to raise our conversion rate, we've got to be the common denominator, right? We need to say, if I had to do that 100 times over and over and over again, meet with these people until I got the deal, what would I have done different each time? And is there a world in which I could have walked away with the deal? And if there is, I need to figure out what I didn't do right, because then when I figure that out, I cannot make the same mistake again. That's called paying a stupid tax, when you make the same mistake a second time, right? Or a third or fourth time. And so if you understand that, then you can level up and then you make a whole heck of a lot more money. You become way more profitable because you make a lot more money in a lot less time and a lot less expense.
And I assume across, when you say conversion rate, it's about getting those leads, right? And leads for me on my business is new investors. But that comes probably down to marketing, and it probably comes down to being very precise with your approach and your mission and your values and all that sort of stuff that really is going to help the person say, I want to do business with you. I think if I've probably read between the lines there, is that probably how you're getting to that higher conversion rate?
Right. So like read for you, right? So any business, that's not like syndications aren't a business that I'm in right now. But let's just say I was in that business. If I were looking at conversion, these investors, a lot of people you're talking to are going to invest with somebody. And if you meet with them or you give them your proposal and they choose that you're not the investment for them, but they're going to invest with somebody, then, the reality is you probably could have made a more compelling argument, right? And if you figure out, okay, what could I have done differently to be more compelling to these people, right? Because I do believe that my investment is a great investment. I believe it's safe. I believe the returns are great. I believe all of these things, but they're not seeing what I'm seeing. My argument isn't compelling enough. And if I go back to instead of just continuing to send this out because some people think it's compelling, I tweak it and make it better and stronger. All of a sudden, instead of 1 out of 3 or 1 out of 10, I go to I double my conversion or triple my conversion. Then all of a sudden, I'm getting such a better return on the same effort put out. Right.
I love, sorry to interrupt. I love that because I do remember a story back when I first started raising money. I think I told it on your show earlier in the week. Was I approached 50 people to raise $500,000. This is way back in the day. And I heard crickets, right? And it was a reflection of me not doing a good enough job. This is years ago, of 1, my marketing material, 2, my education process, right? And 3, just understanding as a beginner, when you don't have a track record all those years ago, your conversion rate is going to be lower, so you need more people in the pool, right? Now, fast forward 6-7 years later, when you get track record, you get experience and people trust you, that comes through time, but you can accelerate that through good marketing, through good messaging, and good education. And I think, I get a little bit off topic here, but it's good to relate it back to businesses and conversion, and how the underlying systems of what you do in your business and what I do in my business is really the same thing: education, transparency, and building that track record and trust, because that's easier to get an easy yes than a long no, right? Because you're spending too much money. So I love that. And even to myself, like, what am I going to do? Like, go through fuel on the fire and spend a bit of money on marketing? Like, it's got to be targeted marketing, right? And I know you say $150,000 a month. I'm sure within that 150 grand, there's a lot of dollars in marketing that you're spending to get those inbound leads to go and double your conversion. So I absolutely love that, mate. Look, I know we're coming to the end of the show, but at the what do you got personally planned for 2022? 6 kids? No more on the way, I could hope.
No. I told you, I figured out what caused it. Now I can stop it. Right? It's crazy. I've got everything from a high school senior to a kindergartner. So want to spend some time with the kids before Katie graduates. So that's really important for us, like some trips, some fun stuff. We decided to go to Florida this year instead of, normally we go over New Year's, we go out of the country. But just with all the COVID stuff, like I'm not as worried about a lot of the COVID stuff. But what I am worried about is paying for a vacation site and then not letting us leave the country. Like that is what I was more worried about than anything else, which I hope that's not offensive to anybody, but,
no.
That's the whole thing there. So we decided to just pick a place, Destin, Florida, where they have the crystal water beaches. So I'm excited about that. Never been there, but I've heard so many people say it's great. So I'm like, all right, I want to go someplace where it's somewhat warm and where the beaches are clear, where I don't have to worry whether they're not going to let us out of the country. So that was, so we're doing that. And then, other than that, I'm really focused on raising our conversion rates, growing. If anybody out here has a direct to consumer marketing, like you're either a wholesaler or a fix and flipper, we're building the coaching business up, teaching people how to monetize those dead leads, right? Because most of the time, if you get 20 people that raise their hand and say, I want to sell, 19 of them are going to sell with somebody else. How do you monetize those other 19? That's what we teach people how to do. Make the most of that and really compress the decades into days so that you don't have to build the whole thing over years, but you can do it, pretty much takes 2 weeks to really set something in place. So those are the things that we're really focused on. But yeah, man, I'll tell you, I'm excited. Like, life is good, business is good, things are just going in a really good direction.
That's awesome. Well, mate, at the end of every show, we like to get into the top 5 investing tips. Ready to get into it?
Sure, let's do it.
Mate, what is the daily habit you practice to keep on track towards your goals?
I normally was a nighttime person when I was growing up and through college. But I saw the success leaves clues, and almost somebody's going to tell me at some point, some outlier that wakes up like around 10 o'clock or 8 o'clock or whatever, and rolls out of bed and does their thing and is successful. But I found that almost all the people that I respect start early. They knock out the things that are important, and they know what their one thing is, and the one thing is defined as if you do this thing, everything else becomes easier and unnecessary. So my morning routine is focused on finding that one thing and really focusing so that I can get the important things out and not just deal with the urgent.
Love it. Question number 2 is, who's the most influential person in your career to date?
Oh, most influential person. I would say, honestly, I did a life map, and every time I've leveled up, it's always come because of new relationships in my life. So I have a ton of different people, but honestly, like I said at the beginning, I'd be dead or in jail if it wasn't for my young life leader, a guy that came into my life and kind of taught me what it was to be a man when I was a punk kid that was doing really stupid stuff. So that's probably the most influential person that kind of got my head straight. And then from there, I've sought out mentors. People, when I hear them, on podcasts or at conferences, I like their vibe. I just reach out, and so I have a number of people through the years that I've reached out to and built relationships with that have helped me level up.
Love it. Question number 3 is, what's the most influential tool in your business? When I say tool, it could be a physical tool like a journal or a phone, or it could be a piece of software that you can't run your business without. What is it?
Well, can I say higher than I made?
Yeah, of course. People are tools. Yeah, of course. Not literally.
Well, I wouldn't classify him as a tool, but like in that sense. But yeah, I don't know. But I would say the having a COO in my business, because I'm such a vision-driven person, having somebody that can implement the ideas, and also he's somebody that I trust. So when I get focused on shiny objects and get undisciplined in my focus, he can also ask the question, is this really where you want to be spending your time? And helping me kind of come back to staying focused. Just as an entrepreneur, I know that I can see squirrels everywhere, and being able to stay focused, being able to have somebody in my life that is disciplined, is able to implement and keep me focused is probably the best single thing that's happened in my business career.
Love it. In one sentence, question number 4. In one sentence, what has been the biggest failure in your career? What did you learn from that failure?
The biggest what? I'm sorry?
Failure, the biggest mistake. What did you learn from it?
Seeing that something worked and thinking that I could just go all in. It's the hubris born of success, right? So all of a sudden you start to win, and then you go all in before you build systems around it. And in Zappos, they say that businesses also oftentimes fail because of indigestion. They can't consume everything that they're taking in. So that happened to me, and that's another story for another day. But literally had about $10 million worth of debt that forced me to get out of that in the early 2010s. That actually built the business that I have now. But that was a crazy, crazy, crazy time.
Awesome stuff, mate. And last question for you is, where do people reach you to continue the conversation? They want to be in your sphere. Where do they go?
Yeah. So, like I said, I reached out to so many people early on in my career. I still do it. So I wanted to be available to other people. So on Instagram, I personally respond, not my assistants, like in other mediums, just because people were so generous with me. So if you go to Instagram, it's at Cradrock, an old high school nickname. It's not my last name, but CRADDROCK. If you send me a DM, I will respond to that personally. And maybe not right away, because I do get a lot of them now, but I personally will respond because people have been so generous with me on that. Also TikTok, Chris Craddock Official. And if you have a direct to consumer, like you're buying houses, flipping houses, wholesaling houses, go to my website, chriscraddock.com. And I'd love to see if there's a place where we could help you, really find vertical integrations in your business.
Love it, my friend. Well, look, I want to thank you for taking some time out of your day to jump on the show. I just want to reflect some of the things that I took away that I was busily writing my notes down here. I think the biggest thing that you said earlier was imperfect action beats perfect inaction. And that's a really important quote. And talking about you going from a tricycle to a bicycle, then going to a car to build your dashboard, then going to an aeroplane. I think that's a really great analogy. I'm all about analogy. I'm very visual. And you're right. Going fast on a tricycle takes a lot of effort, right? Going fast on a bicycle is a lot easier than in a car. And I just loved how you're now focusing on things within your business to help you build a better ROI. So building out your systems better with all of this stuff you're doing, and using that data that it spits out to make better investment decisions in the future for the business. So I really, really applaud you for that. And the last thing you talk about is your business through the hard work. What you've built today, I think it's really incredible. I really give you kudos for all that. But did I leave anything out that you want to add before we sign off here?
No, this is great. I'll tell you guys, last 2 things that I'll just say is this. If you want to win in business, it's activity and skill, right? Talk to enough people and then work hard to get better at what you're saying when you talk to people. Like, if you boil it all down, it's always just activity and skill. So Work hard and then be better at what you say when you're working hard.
Love it, mate. Love it. Well, look, again, thank you for taking some time out of your day. Enjoy the rest of your week. Have a great weekend with the family, and we'll catch up very, very soon.
Thanks for having me.
Well, there you have another cracking episode jam-packed with some incredible advice from Chris. Please check him out on Instagram at Chad Rock. I think I've got or Crad Rock. And we're also going to have all the show notes, all the links from him in the show notes up on my website at redgoosens.com. I want to thank you all for taking some time out of your day to tune in to continue to grow your financial IQ, because it's what it's all about here on this show. There's no BS on this show. We're going to do this all again next week. So remember, be bold, be brave, and go give life a crack.